Today I want to answer the question that you have probably had if you've ever been pre-approved for a mortgage or you're thinking about getting pre-approved for a mortgage. And that is, do loan officers care that you went out to Chick-fil-A 4 times this week? What's up everyone, my name is Kruiz and I'm a mortgage advisor at the KC team over at Neo Home Loans. I'm here in Charlotte, North Carolina. And before I get started on today's video, please go ahead and subscribe to the channel. Helps me know that I'm making valuable content. And then also, if you have any questions or you have a topic you want me to make a video on, please leave that below. I'd love to get that done. I got this question on Facebook yesterday. I thought it was a really good one. And it's not something I really think about very often because it's really a non-issue, but if you're thinking about applying for a mortgage, it might be a big concern of yours. And that's, do loan officers care that you go out to eat? Do they know that you like mugs with the girls on Saturday? Does it make a difference that you like to go out to Chick-fil-A probably more than the average person? Does it matter that you love Amazon Prime and you have a problem with all these packages showing up and you kind of spend a little bit too much on that regard? And the reality is no, we don't care. But I want you to understand why a loan officer is even asking for your bank statements in the first place and then what they're looking for. The loan officer is looking at your bank statements when you get pre-approved for a few different reasons. But really what it is that it's their job to structure the file so that it can get put into underwriting and have it get approved, because that's the way the loan officer gets paid. It does not get paid until that loan funds. That means it's in their best interest to get you approved and to structure your loan in a way that the underwriter will have no choice but to say yes. And they do that by pouring through all of your financial statements up front and then structuring your file so that the underwriter sees that you're not a risky borrower and that you should be approved for a mortgage. That being said, there's going to be a few items that they're checking for when they're going through your bank statements. So when you do apply for a mortgage, they're going to ask for the last 2 months of bank statement. When they get those bank statements from you, there's 3 key things they're going to be looking for. Now there's going to be some other items that maybe they'll talk to you about, but there's 3 key items that they're looking for in those bank statements. The first item that they're looking for is going to be large deposits. They want to see if money is coming into the account that is not normal in any way. They need to make sure that all the money that is in the bank account is legitimate, right? So that's the assets that you're using for closing costs, the assets you're using for down payment. Now there's 2 key ways in which people may make mistakes in this. The first one is mattress money. Mattress money is basically money that you kind of keep and it's cash and you don't put it in a bank account for whatever reason that might be. The mattress money, they think that they can either A, use it at the closing table, or B, that they can deposit it right when they're looking to get a mortgage, and that's not the case. That money needs to be seasoned because we don't know where that money came from. The second way is through gift funds. Now, gift funds are another way in which people might be able to qualify for a mortgage and have the funds to actually put down on their home. And gift funds are awesome, but every program looks at gift funds differently. Every program has to document them differently. Before you go ahead and get those gift funds deposited into your account, you need to talk to a loan officer on how that works and what guideline is going to be specific for you for the program that you're going to use. So money coming into the account is a big deal. Number 2 is money going out of the account. Money going out of the account is important because they want to see if there's any instances of what we call undisclosed debts. Now, undisclosed debts are different from regular debts because when we pull your credit report, it's going to show all your liabilities. But if you have an undisclosed debt, it needs to be factored into what we call your debt to income ratio. Your debt to income ratio is where we take your debts, we take your income, and we compare it, and we see how much of your income is accounted for that is not going to be used on debts, such as your mortgage payments, such as credit card payments, such as school loans. All those kinds of things are going to be debts. Undisclosed debts are the ones that just don't show up on the credit report, and those need to be factored in. So again, explain to your loan officer ahead of time what those items are. It's going to help them do a better job for you. Third thing that they're going to be looking for inside of bank statements is going to be when you overdraft your account. So one overdraft is not going to be the end of the world. You might just need a letter of explanation of why that happened and that it's not going to be continued in the future. But if you have a habit of overdrafting your account every single month, that could be an issue. And the underwriter is going to take a look at that, notice that, and ask why. Explain to your loan officer what's going on and submitting that documentation up front. They're going to be able to tell you whether that's going to be an issue. Those are the three key things that they're going to be looking for in regards to your bank statements and when they're going to be coming through them. That's one document of many different documents that you're going to have to submit. And the only advice I have for people that are looking to get into the process of buying a house is just to give more documentation than you think you need. It's going to be so much more helpful for your loan officer and so much more helpful for you to provide everything. And if you're ever in doubt and you think maybe it's a silly question, ask your loan officer anyway. They'll be able to tell you the answer. If you have questions about bank statements and you want a safe place to ask them without feeling like you have to get pitched, leave a comment below, shoot me a message, shoot me an email, shoot me a text. I'm here to help if you have any questions at all.